If I had to short a stock for the next 12 months, what would that stock be? Enphase Energy. Enphase Energy. Enphase Energy. I think this one's going to get into some real trouble in 2023, and maybe it even starts this quarter. We'll see.
When I think of all the stocks to short in the market, that's the one you want to short. I would call him a value investor when he goes and says like, oh, this company is a 10 PE. It has to be worth more. Like, for example, AT&T is at a 6 PE. Maybe it should be at a 12, but no, if the market is not going to value AT&T at a 12 and it's going to value it at a 6 or 7, that's the market. If Meta, which I even have shares in, is going to value it at a 10, that's the market, no matter what I feel personally about it. That's the way it is. And if they're going to value Tesla and Enphase in a higher PE, higher price of sales, because those companies are growing and expanding super fast, and those cash flows are more important for investors like me and you, would rather pay more for those companies that are growing super fast than have a 10 PE for Meta or a 6P for AT&T. I'm not running out there trying to get more AT&T, are you?
No, I'm not. I just think let him say that stuff
All right.
and then rebut him. Let him, because he hasn't even said it in the video yet.
No. He's already said I'm going to short. If there was one
Right.
stock, I'm going to
Of
short.
course, but let's get into his reasons and then tell me why you disagree with his reason. But we got to hear him say it.
A lot of concerns adding up here. One, the stock's performed amazing this entire year, 36%, okay? The stock is at an incredibly rich valuation, price to sales ratio of nearly 20 for a price of sales. Okay, 175 PE ratio and a 75 price to book ratio. Okay, so the valuation on Enphase is insane.
Do you see a fault in his argument, or do you actually agree with his argument?
His first point is that if Enphase is at 175 PE, and that is a really, really rich valuation.
Before you go on, what is the forward PE? Because yes, let's go point by point, like you're saying. He's looking at the current P, the previous 12 months. He's not looking at the forward P when he's doing that. Go ahead, bring that up. This is a guy that always looks at forward Ps, by the way. He always talks about it. And in this case, he decided to talk about the trailing 12 months. That's what he's talking about. That's 170. If you go to statistics and you look at what is the forward PE, the forward PE is 52.
That's still high.
It would be high if the company was not growing over 50% compounded. It would be high. When a company is growing at over 50% compounded, their PE is in line for their growth actually right now. So I would say they're almost at fair value. In fact, I'm not saying I'm rushing in and buying. We've discussed that I was a seller at 300. Now at 240 and under, I'm waiting for those buying opportunities. He's coming in at the wrong time to say these things. He should have come in 3 months ago when me and you were discussing it was overvalued.
Although those numbers are true, it's at 175 PE. Even if it's trading at a 52 forward PE, there are some forces that move the stocks that look at those things to know when it's maybe getting too rich or not. But for the most part, I think those PEs only matter if, say, they miss earnings.
They reported earnings after the bell on Tuesday. I think there's going to be a major slowdown in new homes being built, and I think that will end up hitting Enphase's numbers come 2023. I think at the end of the day, it'll make for a situation where there's going to be less production of their product. And on top of that, I think no one's going to want to put any money into their home at all for, the next 12 to 24 months. So for that reason, I actually think Enphase could have some troubling numbers in 2023, some troubling guidance. And therefore, that sets the stock up in a very tough dynamic, because even if their numbers are still good and even if they're still showing growth, you can't have it where it's not showing ridiculous growth because it's been priced like that, right? We've seen that play out with Tesla. Tesla's a perfect example, right? Still phenomenal growth for Tesla this year. It's been incredible. What's the stock price done? It's gone down 40 something percent, right? 40 something percent, although the numbers and the growth have been extreme, right? But it was priced very, very rich going into this year. So I see the same dynamic playing out in Enphase, but in 2023, where they could still put up decent growth, but actually the stock will fall considerably throughout the year, essentially. So, if you're a long-term buyer of that stock and you're a big believer of Enphase over the long term, then, you might get a decent buying opportunity for the next 12 to 18 months, but I'm just not a believer in that one. Not in this sort of market with that sort of valuation and the troubles I see kind of coming in the real estate market over the next 12 to 24 months. I don't think it's going to be an ideal dynamic for Enphase. Okay.
One of the biggest things he said on a bull case was that assuming that only new homes buy solar, that a slowdown in new home construction means doom for Enphase. We've said this before, there's less than 1% penetration. There's plenty of roof space in the United States and the world for Enphase to double, triple, quadruple without any new construction. So it sounds to me like he's not really informed too much about Enphase's like core business model and how they're making their money.
A lot of people don't know what they actually do, and I don't think he actually knows what they do and why it's important.
He must think that they're more of a solar panel company and not really understanding that they're, in other words, yes, the point is those statements make me feel like he doesn't really understand what Enphase does, and he's maybe grouping it into a category versus what that company's doing in the category.
You know, I would make the same mistake if we weren't so entrenched in learning about this. Like if you brought up Corsair, I can tell you it's a computer peripheral thing. I don't really know about the details of Corsair.
Yeah.
But if you ask me about, you know, Badri's, well, what does he eat for dinner?
Yeah.
I would.
You're like on his Instagram.
I actually don't know what you eat for dinner, Badri, if you're watching this. But I'm just saying, we know so much about Enphase and what products they're actually making, why they're important, why it's important for the future, why their growth is so spectacular, why it's going to keep going for the next decade, S curve upon S curve in energy and batteries and storage and whatever, vertically
EV charging.
We know too much about it, and he doesn't. I feel he doesn't know anything about it because he's bringing up new home construction. That's not even something they talk about in their quarterlies. Like if you listen to one of their, there's no discussion about new home construction. That's nothing to do with it.
Well, he tells you he doesn't know. Yeah, he doesn't know. He's unaware of those things. So you have to take everything that he's saying with that grain of salt, that he doesn't fully understand the business model. And understand too, I don't think he's talking specifically about the company. I think this video seems to me like he's trying to figure out how can I make money in this bear market. And he's seeing what happened to Tesla, which he did have some good points on that, but he's saying, oh, this happened to Tesla. It's a bet. I think he's upfront about this being a bet, because he didn't say don't invest in Enphase. He said short Enphase. That's when you're certain of an outcome. You know what I mean? Yeah. Saying it's not investable is different from saying I'm pretty sure this stock's going down.
Well, I mean, he's saying it's uninvestable by saying if I was to short one stock in the stock market, it would be Enphase. Okay, look, I'm not, first of all, me and you, I want everyone to go back to the old episodes, take a look. The last couple of months, me and Carlos have been bearish on Enphase, okay? Yeah. We've been saying the stock is too high. I've sold shares. If you go on our Discord, which is free, come join us.
Yeah.
I've been offloading shares, and you can see my trades of offloading shares.
Yeah.
And don't get me wrong, I still have a majority of my shares in Enphase, and I'm not going to get rid of those for a long time. But at $300, it was totally overvalued. And we were saying it in our Discord, and there's a lot of bulls who were saying maybe I was being too bearish or whatever. They didn't like that I was being bearish about it. But at a certain point, when a company is growing at 50, 60, 70% compound, and like to your point, if it continues and it doesn't stop, this is very important, that it doesn't stop, it continues, that a 50 PE, forward PE, is actually a reasonable valuation for a company that continues to grow. The reason Tesla's getting hammered now is because they promised us 50% growth, but they're giving us 47% growth. So they haven't beat their numbers. And so I think he's a little worried about that aspect of it. He's like, oh, I've seen what happened with Tesla. It seems like if they miss one number, which is true, this will go down too. But would you short Enphase? This is the question. Would you actually put money against this company?
Well, he's saying if he had to, there was one stock.
Would you put money right now? No, it's overvalued.
No, I mean, that's not what I do with companies that I say believe long term. I don't try to short them. That's a trader's mentality. And this goes back to our last video rebutting Stephen Mark Ryan, saying that charts don't have any value. What Jeremy is talking about is, I think, what Stephen Mark Ryan was talking about. That sort of trader's mentality of let me bet on this and try to go down in the stock market is this game of charts and numbers. And by looking at those numbers, I can tell what's going to happen in the future. There is a little bit of that in what Jeremy's saying. But he's a weird mix, because I think he's being upfront about it. This is just something he thinks would be like a short-term opportunity to make money and not a condemnation or a full-on thesis on Enphase. You know what I mean? It's clear anyone that knows Enphase knows that he's not really up to speed on exactly what they do, but he's looking at those fundamentals and seeing that pattern maybe having happened in Tesla, and it's something that could be repeatable. And to a certain extent, he's not wrong. They're both, say, priced to perfection, right? They're priced where they have to be perfect. But a big difference is that Enphase is not disrupting the car business. See, Tesla is disrupting the car business with its success. There are many, many companies that are failing as a result of Tesla's success. And we can get into even, the political implications of it. There are a lot of forces that don't see Elon Musk's companies want to succeed. So any tiny chance, any misstep whatsoever is an excuse to jump on board. But Enphase is predominantly carving space in a new territory. They're not really disrupting anything. I mean, you could argue that they're disrupting energy, but it's just not the same, because the energy companies are actually involved in Enphase's disruption of it, and it's not like Enphase directly is doing it. You know what I'm saying? It's more the industry as a whole. So I just think that there are just different forces at play, and I think the markets will respond to Enphase accordingly based on what the numbers are, and I don't think there's going to be an over-exaggeration either way. And I think that's what he's saying, that there's going to be this over-exaggerated sell-off of Enphase to the point where you'd short it, but it's just Badri is not Elon Musk. You can't discount those things.
I would agree that the prices should come down. I actually agree with that point. The problem is when you say that this is a bad stock, this is a bad investment, this should be shorted, you are actually not understanding the story at all. That's all I'm talking about. That's why we're bringing up Jeremy here, that he doesn't get the fundamental story. He's telling people that this is like the only stock that you should be shorting in the stock market because it's too overvalued, basically. And he doesn't see the picture. And that's all I wanted to bring up, that he doesn't see the whole future potential of it, because in fact, he should just telling people, you know what, wait for the right price and then go buy it.
In this video, he is not making a judgment of Enphase as a company. He even says that they have to, even if they show insane growth, it has to be insanity growth to justify the current, right. But he's not saying that he's bearish on the company, nor is he saying it's stock. He's just saying, I'm looking at where they're at now, what the market cap is, how they treated other companies in this space, and all of these numbers are telling me that this stock should go down unless their earnings are so bonanza through the roof, 65% growth, something ridiculous.
It has to beat expectations. That's the bottom line.
But by a massive margin. And he's not wrong, but I'm saying that I don't think that the market would over exaggerate to the downside or the upside based on that, because there's different concerns with Enphase. I understand why he's saying that, but I don't agree.
Well, let me be clear that if Enphase goes down, I'm a buyer, and I want him to be right in terms of the short term, because I have no reason for Enphase to hang it around 250 because of where I don't want to buy it. But at $200, I'm just massive buyer. At 180, I buy more. At 160, I buy more. So if his bear case is working out, by the way, I'm not actually sad, because I'm not selling any more Enphase. So all I want is more Enphase. If it's like I'm a broken record of this. I think I wanted to bring up the Meet Kevin thing. I feel like he also, part of him missed out on the story. He could have had a double in this last 6 months if he only listened to Meet Kevin. I think Meet Kevin was out of all stocks, but I'm not sure what happened there. But he told, I think in one of the episodes, they talked about Enphase, and he says, I don't get it. He even said it in the episode, I don't get it. Like, why would this stock have better growth than Corsair? Why? And of course, if you don't get that whole thing, why solar energy is taking over, why clean energy, why renewables, why electric cars, if you don't understand that whole story besides Tesla, there's a whole story there besides just Tesla, right? So if you don't get it, I think you're going to miss out on Enphase. And I think he's going to be the guy who maybe 10 years from now is going to say, oh, that was the Google of solar energy. That was the Google of clean energy.
Honestly, he might not get it. It's not, I mean, to people that are interested in that, it's not too difficult to follow. But if you have no interest or background at all in anything technical or electrical engineering or understanding anything about energy in general, it could go over your head that they make this microinverter that, it's just this thing that it's not sexy, and I know that he likes very simple business models. He's very much like Buffett in that sense. I need to be able to like say your company in like a sentence, right? And it is a little more complicated to understand what Enphase does than Frito-Lay, you know what I mean? Like,
no, it's
or Corsair, like you understand very simple.
It is harder to understand why this piece is important in the whole chain of clean energy. So if you don't go a little bit deeper, you would have a hard time understanding why a PE, even a forward PE of 50, makes any sense for a commodity, right? This could be a commodity business. So maybe in 10 years, though, it could be a commodity business, but I don't buy commodity businesses anymore, like Corsair, okay? I'm not trying to buy that. I'm trying to buy the monopolies of any business, Tesla being a monopoly, Enphase being a monopoly in its business, Google being a monopoly in its business. So I think he's missing that whole thing of it. And that's my only point, that he's not doing enough research on it. He's looking at the stock price, he's looking at the PE, he's looking at the
Yeah.
price of sales, and he's like, well, Corsair's at a 10 PE. This is at 175. Obviously, Corsair is going to go up way more, and Enphase is going to drop way more. Like, that's the thinking here, and I feel like he's a value investor.
It is exactly what Stephen Mark Ryan was mocking. This idea that I look at the charts, I see this, I don't research in the company, I don't understand the fundamentals on a deep, deep level, or see, what are they doing? What are the macro forces that they're dealing with? What is that company's specific positioning, strategic advantage, et cetera, et cetera. He's just looking at the charts and saying, I would short this. I mean, I just in general have issue with that, but I think he's being clear that that's what he's saying. And I think anyone that follows his channel understands that. I think he's just being ruthlessly honest. It's almost like a sight reading, like a psychic, right? You get like a quick 5 minutes sight reading,
You know what you got to add in here? Jeremy as a psychic, put that little hat on his head. Tarot cards. Like
yeah, that's what I mean. It's stock. Right. It isn't stock astrology. It's
go to Carl Sagan video now.
2,000 years ago, the idea developed that the motions of the planets determine the fates of kings, dynasties, empires,
and stocks. Technical analysis is a load of horse.
And then, not to pick on Jeremy, we'll finish this video up. I just wanted to bring up this little Meta part because it once again goes to his mentality that any low PE is the only reason you invest in a company.
Meta. All eyes are on Meta on Wednesday, okay? I mean, there's a lot of different companies reporting on Wednesday. This is the only one that everybody's attention is going to be on for Wednesday, okay? Now, I'll tell you if I'm going to be buying the stock prior to earnings. It's trading at a 10p ratio right now. The stock's been devastated. We all know that, right? It's down 61% year to date. It's been incredible. They're wrong. They are 100% wrong in regards to the stock. And it will be the best performer of big tech related stocks over the next 2 to 3 years. And there's not even like 1% doubt in my mind about that. When it comes to Meta, what I'm seeing play out now is IG Reels are starting to take off in a very significant way. And what Meta always does so phenomenal is it's a similar strategy to essentially like, if you're a great football coach, a defensive coordinator, something like that, you take away the other team's best player. And what Meta always does, they take away whatever their competition is, they take away their best feature, they add it onto their platform, and basically they make it just as good, if not better. They did this with a ton of companies in the past. The most notable was Snapchat when they stole basically Instagram stories, started, and they took the Snapchat story idea, which Snapchat at that time was a growth beast, and right after IG took away that and started implementing that and did it on a high level, Snapchat's growth was never the same after that. Snapchat's stock price was never the same after that. And they did it to perfection. They're doing the same exact thing with TikTok right now with IG Reels, and that has taken off in a massive way. Now, the interesting thing they do is they make sure they perfect that, they get the algorithm perfect, and then a quarter or two after, they start the monetization. And that's when you start ramping up the dollars, and all these advertisers all of a sudden have this new way of advertising that they think is beautiful, and all of a sudden, boom, 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 up goes revenue. So in terms of money hitting to the company's income statement, that's going to happen in 23 for IG Reels. But right now, it's just them perfecting the algorithms, getting them perfect to feed everybody the stuff that they want to see, that they're going to share with other friends and family members and things like that. And, so we'll start to see that in the numbers, and it's taken off in a massive, massive way.
The problem I find, even though we're both Meta investors, that I'm investing in Meta not because of the PE. The PE is great, 10. I feel it's undervalued, yes. But I'm buying it because I use the product Oculus, and I think there's a future to the product. So I feel like everything he talks about is just, I'm buying something because of the valuation. I really feel like he's just a value investor. He's not buying growth stocks anymore. If you look at it, he's basically buying what any value investor would look at as like a value stock. Like Meta has become a value stock. Corsair is a value stock. Logitech is a value stock. Even TTCF, I think at this point, is almost... I would say that's almost a value stock.
What's the opposite of value? Yeah, that's what that stock is.
Well, it's even funny.
I think he had hopes for it. I think he had hoped for it to be a growth beast that would then turn into a value play, but it's not.
He's hoping for a dividend at some point. Really.
Yeah, maybe. There's a lot of pizzas.
I will likely be buying the stock into earnings. I'll likely be buying it after earnings. The deal with me and Meta, this is a buy for me all the way to 200. To 200. So for me with Meta, I'm not going to be done buying this stock anytime soon. You know, it doesn't matter if it's 160, 110, 130, 140, 180, 100. It doesn't matter to me. At the end of the day, this is a huge buy. It's stealing money, in my opinion. It's the most stealing money you can possibly get in the stock market right now. By a lot.
So back to Enphase, when he's attacking a high PE company, I understand why you would attack it, because it's easy. We're in a bear market, first of all. It's easy to attack a high PE company that they're supposed to come down to everybody else's level. That's just the way life works. You're not supposed to be up there. Get back down to where you're supposed to be, where everybody else is on the ground, right? So I understand that mentality because we feel it, right? We feel it in this bear market. But then the smart part of me understands that, yes, Tesla might come down. Yes, Enphase might come down, but you better be buying that. You better not let this opportunity pass you by. He's missing that. That's an opportunity. Not the Corsair is the opportunity. That's the trap. That's the value trap. The opportunity here is the Tesla, is the Enphase, is the Bitcoin, is the Ethereum. That's the opportunity. And he's totally missing that. That's my problem with all of this.
Well, I mean, he seemed pretty clear that he's buying. I mean, it sounds like Facebook is his Enphase. If we're comparing to you, he says, I'm a buyer of this stock. Anything under 200, I think you're stealing money from the markets because it's so low. He did cite PE as an indicator of like why it's so on sale, but in terms of why he's bullish on it, he gave a very specific reason. He feels that we're not going to see the ad revenue generated from them essentially stealing TikTok's business model and buying it in. Like, he gave a very specific growth reason why he thinks revenue growth on the advertising side is going to increase. I don't know. I don't see anything wrong with what he said. Even if the reason he's bullish on it has nothing to do with VR and yours is, he still say that he thinks the company's going to continue to make money. But again, these are like, when you're going through these cards, like, there's no way he's going to do an in-depth analysis of every single stock that he's talking about if he's doing sort of a gloss over. So maybe VR is a part of his long-term reason for holding Meta, but it sounded to me like he was just trying to capitalize on what's happening earnings week and taking the temperature of the markets and kind of trying to get just putting his ideas out there of how he thinks the market's going to respond to some of the most anticipated earnings this week.
He did actually give a much more plausible reason for Meta. I actually agree with that. In terms of the others, I just keep referring back to the other stocks like Corsair and TTCF and those things that we know it's basically dead money. Like, even if there's a bull market, it's not like you're going to be making a fortune on Corsair. I don't care what world you're living in. Well, you're not going to have a billion kids run out and just buy Corsair laptops or Corsair gaming pads or whatever the hell he's processing.
Right.
Let's bring this back to Enphase, because this is an Enphase video. Let's be clear.
Somewhere it's so weird. Every video becomes about Enphase except the Enphase video.
This is an Enphase video. I'm just saying, the only reason I was pissed off a bit was that.
Yeah, like, why were you mad? Because it's clear you came to this mad. Like, you want to fight, and I know I'm not giving you the fight.
Jeremy,
so like, where's the fight? What do you want to fight? What do you want to fight about?
You don't have to give me a fight. I like that you're giving me some counterpoints and protecting Jeremy, because maybe we'll have him on the channel. So you never know if that's going to happen. I just see now Jeremy for what he is. And that's a value investor. That's what I see him as. I don't see him as a growth investor or a growth-minded investor, because even buying Tesla, he's not really talking about that. He talks a little bit about, yes, this is becoming interesting, but he's really not interested in that. He's spending more money on TTCF than he is on Tesla.
Well, honestly, I think because he's, between you and me, I think because he's upside down on some of those stocks that he recommended. I think he feels like he has to double down now so that he can get a lower break-even point. That's honestly what I think. If you dump as much money as he dumped into Tattooed Chef at those levels,
and Corsair,
yeah, you're telling me you wouldn't start buying these things when they're $1 just to say, okay, I got to dump some money in the hopes that if there is any kind of pump to $2 or $3 or $4, I can at least cash out a majority of my money. He might be at margin, like. I think that there's more to that story, you know. And the other thing about it too is his channel's financial education. He's got, how many subscribers does he have? Like, so he's almost got 1 million followers. I just think when you have 1 million followers, the reasons why you make videos and some of the topics that you discuss are just vastly different than guys like you and me, for example, that are just with 3,000 subs or close to it, we're just making videos that we find interesting. And that's to say that, not everybody's going to understand or feel like they can participate in the mega cap stocks like a Google or a Facebook or, right? If you want Tesla news, there's plenty of YouTube channels that cover Tesla, right? But I think who's covering Corsair, who's covering some of the smaller stocks that he talks about. So I think that's part of his the education part of the financial education.
Yeah, you're giving him a lot of credit. I won't give him that much credit because apparently he did dump a lot of money into really bad companies. And the worst part is Enphase is a highly profitable company. Whether it's overvalued or not, it's a highly profitable company. And he's buying companies like Tattoo Chef, which are not profitable. I'm not going to talk about Meta for a second, but Meta is obviously profitable. But Tattoo Chef is losing money hand over fist, might be bankrupt, in fact, in the next couple of years, because they might not survive. Yet he's recommending people on his channel, the value investors, buy that stock because it's going to have massive growth. We have easy growth in the market right now. Me and you keep talking about it. There's 4 things you got to buy in life. 5. I'll name them for everybody so we can be done with YouTube. 5 things: Bitcoin, Ethereum, Enphase, Tesla, and real estate.
Yeah.
You buy those 5 things in any order you want, you're going to walk away 2030 extremely happy.
Yeah.
You don't buy these things and you start speculating on garbage like Tattoo Chef, you're going to be very, very sad. And me and you speculate a little bit on the side on FUV and things like this.
Right. But a majority of the holdings are in 5.
The majority of the holdings are in those big 5. And then we have a couple of obviously side bets, which are not even doing that well, okay? But the 5 that we had for the last 4 or 5 years are doing fantastic, even in this bear market. So
yeah.
My point is, if we just bought quality from the beginning and not bought garbage stocks like Tattooed Chef, then I think we can all be happier, better investors.
Yeah.
This is not financial advice, right? We have to say that.
Right. It's not financial advice. I just think that we also do have to mention that if the stock market as a whole is like a big bathtub of money that we just want to see money coming in, this Fed hike, the increase in interest rates, right, which like what Kathy Woods wrote the open letter about, a 16 times increase in interest rates, this shock to the system that money is now so expensive is like a big hole in the bottom of that bathtub. It's like a headwind for any stock in this environment to try and stay above. So it's like it's really hard just to stay afloat, let alone grow in this environment. As long as the Fed is continuing to raise rates or further rate hikes are on the horizon, the earnings I don't think matter. In other words, Jeremy makes it seem like these things are happening in a bubble and that everything is normal, that we don't have this sort of macro environment that's like a huge negative pressure on markets in general. There's supposed to be another announcement. They're expecting another 75 basis points. Like,
we're in a bear market.
What's going to go well now? Yeah.
But hold on. It's easy to especially poop on stocks like Enphase and Tesla. As you can see, it's easy to drag them down because their P's are so high. Like if they go from a 70 P to a 50, it loses a lot of market cap. But honestly, it's still not crazy down considering like Meta's at 10, right?
Yeah.
So basically, it's easy to say that. What he's saying is too easy, that this is the easiest short. Like he's making a play, not understanding the fundamentals. And that's where we get to Stephen Mark Ryan, who gets the fundamentals, and Freelancer Finance doesn't get the fundamentals, apparently, as all the commenters have told us.
Oh, yeah.
But I think the story that's being missed, and let's get back to the story that if you're an investor investing for the future, which I think we are investing for the future, solar is growing massively. Like we said, the main point is it's 1%, maybe going on 2% soon of the entire world. Okay? There's this whole market to fill with basically, like you said, Enphase doubling or tripling or quadrupling. It's not even going to be difficult for them to double, triple, quadruple in the next decade, right? It's not going to be difficult because there's so much vacuum and void to fill.
His assumption that Enphase's growth is tied to the rate of new homes being built is a really big error. Like if you miss that point, man, like of course you think that you would short it,
Yeah, so that's really the point, that I don't want people who are watching his video to be distracted from the actual story of a company like Enphase and Tesla. What is the actual story of these companies? And they have a narrative that's going to play out for the next 20, 30 years. These are generational companies.
Guys, well, if you like this video, hit like and subscribe and help us get Vitaly some help because he's really upset about this short interest. So Vitaly needs to buy a couple of call options to make sure Jeremy's puts expire worthless.
No, I actually don't mind. Tank the stock, bring it back to 150 where I feel comfortable going.
And load it, back the truck up.
Yes, because I sold at 300. I'm happy to buy a lot more at 150, knowing exactly where my money's going. I'm not afraid. When my dollar sleeps with Enphase, that sexy bitch, when she's sleeping with Enphase, I feel totally fine about it. I have no problem with her sleeping around with Enphase, but if
Right.
she gets
Well, look,
a little
leave
tattooed chef on her, then
right. Leave your comments below. Do you agree with Jeremy? Do you agree with Vitaly? Do you agree with anything that I've said? Leave a comment below. Let us know what you think. Join our Discord. It's absolutely free. If you really like us, consider becoming a patron. It's $4.99 a month. It's literally the cost of a cup of coffee or a beer. If you don't like it, you can always unsubscribe, and you still have the free Discord to have the same exact back and forth 24 hours a day freelancer finance. What more can you ask for?
see you on the next one, guys.
Bye-bye.